The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Jerome Powell's speech at Jackson Hole is always highly anticipated, and this year was no exception. Powell acknowledged the progress made in reducing inflation, which has been a primary focus of the Fed over the past few years. He indicated that inflation has slowed to a more manageable 2.5%, down from the peaks we saw during the pandemic recovery period. However, the most significant takeaway from Powell's speech was his comment that the time has come for the Federal Reserve to consider lowering interest rates.
Inflation has declined significantly. The labor market is no longer overheated, and conditions are now less tight than those that prevailed before the pandemic.
This marks a shift from the Fed's previous stance, where the focus was on raising rates to combat inflation. Powell's suggestion that rates might decrease soon is a signal that the Fed believes the economy is stabilizing, but it also reflects caution about potential economic headwinds. If the Fed does decide to lower interest rates, this could have immediate effects across various sectors of the economy. Lower interest rates generally reduce the cost of borrowing, which can stimulate economic activity by encouraging businesses to invest and consumers to spend. The stock market tends to react favorably to lower interest rates. When borrowing costs are lower, companies have more capital to invest in growth, which can lead to higher earnings and, consequently, higher stock prices. Sectors that are particularly sensitive to interest rates, such as technology and real estate, could see significant gains if the Fed begins easing. Growth stocks, in particular, stand to benefit. These companies often rely on borrowing to fund expansion, and lower interest rates reduce their capital costs. ETFs that focus on growth stocks like the Invesco QQQ Trust or the ARK Innovation ETF could see increased investor interest as a result. However, it's important to approach this with caution. If the Fed's rate cuts are seen as too late or insufficient, market volatility could increase. Additionally, concerns about a potential economic slowdown or persistent inflation could temper the stock market's enthusiasm. For individuals, this could mean lower rates on loans, including personal loans, auto loans, and most importantly, mortgages. However, it's important to note that Powell also emphasized that any rate cuts would be gradual and data dependent. This means that while we could see rates start to decrease, the pace may be slow, and the Fed will likely remain vigilant about inflationary pressures. One of the most direct impacts of a potential decrease in interest rates is on mortgage rates. Over the past few years, homebuyers have faced rising mortgage rates as the Fed increased the federal funds rate to curb inflation. A shift toward lower rates could provide some relief to potential homebuyers by making mortgages more affordable. However, the housing market's reaction will depend on several factors, including how quickly the Fed acts and how the broader economy responds. If rates decrease too slowly, or if inflation remains a concern, the impact on mortgage rates might be muted. On the other hand, a more aggressive rate-cutting approach could lead to a resurgence in home buying activity, potentially driving up home prices as demand increases. Jerome Powell's comments at Jackson Hole signal a potential turning point in the Fed's monetary policy. While the prospect of lower interest rates is promising for borrowers and investors, the path forward is far from certain. The Fed will continue to closely monitor economic data, and the timing and magnitude of any rate cuts will depend on how the economy evolves in the coming months. For now, the best course of action is to stay informed and be prepared for different scenarios. Whether you're considering a major purchase like a home or looking to invest in the stock market, understanding the implications of Powell's speech can help you make more informed financial decisions. That's it for today's video. If you found this analysis helpful, don't forget to like and subscribe for more updates on the economy, markets, and how they impact your finances. Leave a comment below with your thoughts on Powell's speech and how you think the Fed's actions will play out. Thanks for watching, and I'll see you in the next one.